So to get ourselves grounded, when we look at Wednesday during that Fed interest rate announcement, I mean, people were all over the map buying puts, buying calls because, anything above one means that, they're buying puts, and anything below one means they're buying calls. And you can see here, that we pretty much ended the day right in the middle, but, at some portion of the day they were buying puts or calls. But one thing for sure is starting Thursday, you can see here that pretty much all of our bars have stayed below the one area, which means people have been buying calls. In fact, you can see here that, this wick here is probably created by the fact that all of a sudden people started buying puts as everything started selling off. So, we know people have been buying a ton of calls, but how can we prove this? So let's go ahead and look at SPY, and we'll look at something called max pain. So looking at the put to call ratio, the first thing that this is really showing you is in red, these are all the puts and the various strikes that people had on the puts. And then the green are calls and what were all the strikes on the calls. So you'll see here that our max pain of price is actually at 471. So this pretty much means that if we were to close at 471, this means that the MMs would have the most, they'd stand to make the most profit from all the puts and all the calls expiring worthless. So that would be like the best area to land price on the tarmac tomorrow at Friday because they stand to make the most profit. Now, being that the trend has been so strong, it's going to be tough to probably do that in reality, unless, a super hot print comes out for PCE tomorrow. So, what they were doing with 476, and this is my conspiracy theory, is since it's a rigged game and they hold all the cards, all they have to do is turn off the buy algorithm. Basically stop buying and then essentially just let the selling commence. And doing so, maybe they even help that along by selling off a few things that they don't want. It impacts SPY. And then next thing you know, we go pretty quickly into a downward spiral. So anybody that's sold, calls before, I mean, I've done both selling calls and selling puts. Essentially, once price gets above 476 area, 80,000 calls could start being assigned to different people, which means if somebody wants the option to buy the stock, they could, and they could close, their call, and they have the option to take the stock or whatever. But, a lot of times people also have the ability here to just, close the call if they're money ahead. In either case, we don't know when these were purchased. They could have been purchased a day ago, a week ago, 2 days ago. You don't know when they were purchased, but in earnest, a ton of them were purchased. And if you would have held it to maturity, whatever you would have paid for it in order for you to make any money, unless, you're really day trading and trying to make it off of a short-term turn. If you held it to maturity, like these are apparently getting held right now, you'd have to make back the premium before you make, 1 red cent. But from, the MM standpoint, they collect the premium whether or not they're called away. But, maybe they don't want to lose these because maybe they feel like this is going to continue grinding higher into the end of the year. So they want to, be kind of greedy about it and not only collect the premium, but hold on to the shares. So let's go back to SPY. So trust me when I tell you that, as they came into this area, they had a reason for not wanting to break above it, because if so, then, they could start basically, once they get assigned, they get their shares called away from them. They still get the premium if they hold on to it, but you kind of lose out on the upside potential, and then you got to buy back in. And do they want to buy back in? Because probably most of them bought in at the bottom of this rip. As retail is selling at the bottom, they're buying. And then, when they get to the top, they're selling, and then retail's buying, doing the reverse. So there's another area you got to worry about in the upcoming week. So next week being the end of the year, if we look at this volume of 120,000, we have a call wall here at 475, and we have one at 480. Now, next week, will they care maybe if the 475s or the 480s get called away, because, I'm expecting as we go into the new year, that's when a lot of people are going to be trimming and selling off their positions, as taxes won't be due, for another 16 months on those. So, they may not care as much about, either 476 or 480 getting called away next week. But, I can't be sure of that. So let's say tomorrow on VIX Crush Friday, if we open above this area, it could be a gap and a crap, because, they may want to bring this back into range until tomorrow close, so they have some extra money for Christmas. And then as we go into the end of the year, you saw that we had, another call wall essentially at, the 475 area, and one also at basically the 480 area. So are they going to want to, maybe keep us within range here? And this actually could form, almost like distribution before we start to come into the new year. And then they want to go ahead and sell it going into the new year, where we get a true pullback, which in my mind, potentially still is a buying opportunity. But if you watch my video from the other day, you'll see that, I really wanted to get above the closing high here, because then you break one of the Elliott wave rules. And if that happens, then, the trend is more likely to say, hey, we're in a wave 3 impulsive up, rather than, a third wave down that we'd be starting next year for a crash wave 3. So, in my mind, if you watch that video, I'll link it at the end. To me, a lot of that kind of hinges on, can we actually get above 480? But with that call wall, it could be tough. Well, that's all I have for now until my next video, and we'll see you then.